All right, welcome everybody. It's September 14th. This is my office hours. I am Danny Naz, the Pup of Wall Street. And let's talk about what's going on in the market. Do we have a new downturn coming, or is this just a short-term pullback in a market that has been rallying? So before we go into that, just a little bit about myself. I am a full-time trader. Mostly swing trading, but I've been day trading for the last couple of years, just based on the way the market has been acting. I've been in the markets since 2008, but full-time over the last few years. And this is my office hours. I run this session every 2 weeks. Generally runs between 45 minutes to 60 minutes. And I'll review everything from market sectors, what is showing relative strength in the market, what is looking good, maybe some relative weakness as well, a little bit of my process, hunting for trade ideas. And of course, we end every session off with chart requests and a question and answer. So for those of you who don't know, I use TrendSpider to do all of my charting, Black Box Stocks for options, and TradyTix for my algo trades. And this is my educational platform. So it starts off at $129 a quarter or $479 for the year. You see everything on the screen that you get for that. And then I also have an executive plan that has everything from the regular plan, but it also includes coaching calls. Now, there's something that's not up here that I also offer, which is a lifetime plan. That price is going up. There are only 2 more seats left at the current price level. I believe that is $12.99. Yep, once those 2 seats get filled, then I will be raising the prices on my lifetime plan. So let me get over to the charts. Bear with me 1 second, and I'll get that screen going. All right, so we're going to go full screen here, and let's just talk about sectors first. Obviously, the market has been running pretty nicely over the last 5 weeks or so, or was running pretty nicely over the last 5 weeks or so. And then the last 2 weeks, we've seen a bigger pullback. Now, anytime you have a market that's in a downtrend, there's always counter trend rallies. And every time you see a market that's in an uptrend, there's counter trend rallies. And so we've been in an overall downtrend, right? I don't think anybody can argue that the market has been going down, but this rally that we've seen here since was from June to August, that's been the biggest rally in this bear market here. And so now what we're seeing is a pullback. And so, the bears are saying, well, this is the next leg down. The bulls are saying, well, we're in a counter trend rally market and we're just pulling back before the next leg higher. I think it still remains to be seen. The thing that happened this week that was different, though, CPI data came out yesterday, and the numbers came in pretty hot. So it's very likely, next week we have FOMC. It's likely that we're going to see at least 75 basis point rate hike and possibly 100-point basis rate hike. So we've only seen 75 to date. They may get more aggressive because obviously what they're doing or what they have been doing has not worked. And so let's wait and see till next week. Now, PPI came out this morning. What really was a nothing burger. The market rallied initially off of that, and then gave a little bit back, but we still closed green on the day, which is good. The Q's technology definitely fared a bit better, up 1%. But let's dig into some of these charts and see where we're at, and maybe we'll look at upside and downside levels as well. So right now we're looking at the DIA. This is the Dow Jones Industrial Average. And you could see we had an island reversal here. That's basically when you have a gap up, you have a number of candles, and then a gap down. You could also have island reversals to the upside. You can see this 2-candle, downtrend. It reversed on these 2 candles, gap down, gapped up. So here's your, I think it's like a 7 or 8 day island reversal, and now we're pushing back down. So, right now, this dotted line, any dotted lines you're going to see on the screen, that's going to be your weekly chart. We're working right now on the daily chart, and you can see we came into 323, which was acting as prior support, now turned resistance. And we had a big sell-off yesterday. We had a little bit of a continuation, red day on the Dow Jones Industrial Average, although it looks like it's back green after market. But yeah, I mean, this is just a chart to show. It's not necessarily a chart that I trade. I think SPY is definitely a bigger indicator for, where the overall market is. Let me just shut off some of these anchored VWAPs. Hopefully this doesn't become an issue. So yeah, I mean, let me just remove that. We don't need that. You can see that we're in somewhat of a wedge here, right? So you have a series of lower highs. You now have a series of higher lows. Price is compressing. And, what could potentially happen is maybe we continue to bounce, right? Come up, and we can continue to compress until either price breaks above or below. Now, above, what I would say we should be looking at is this 200 simple moving average. You could see on SPY, it acted as resistance here. It acted as resistance here, and then resistance here after false breakout, right? So I think for us, if we want to think more long-term, we have to say we need over that 200 simple moving average. In the short term, so here's our swing low anchored VWAP. You could see, we did lose it a couple of times here, right? And then we regained it. Well, we've lost it again here yesterday. And then today, unable to break back through it, but again, holding this trend line that we're seeing. Now below, we do have a little bit of support. We do have a 618 Fibonacci retracement at 388.74. So this would be my line in the sand for the short term. If we go below that level, then I think the likelihood of us retesting, 372 and possibly down to 363 are much more likely. And you can see we had a MACD cross under. RSI tried to break higher and then failed at 50, and that's sending us lower. So the indicators are saying, we're probably looking at lower prices. But yeah, it just it's a little bit neutral for me. I'm not saying we're going down. I'm not saying we're going up. I think we need some more information. We need some more data to say which direction we're going to go in. But again, keep in mind, next week, FOMC on Wednesday. This week, we have quad witching. So you have 4 expirations at the end of this week. So that tends to make things a little choppy going into the end of the week. Let's take a look at QQQ. Similar story, big wedge. I'm actually going to turn off multi-time frame because it looks like it's too distracting. Very similar, tried to break out, failed at 50, MACD crossed under. We did not touch the 200 simple moving average. We came up to the year-to-date anchored VWAP, and we failed there. We're also below the 50 simple moving average. We're likely below the 21 as well. We are. So yeah, I mean, technology definitely weaker relative to SPY, over the course of the last couple of weeks. I would say even in the last couple of months. But they've shown to show a little bit of strength here and there. So a little bit of strength today, holding that 618 to the downside at 294.16. So for me, definitely under 290, 291, then I'm definitely leaning more bearish. But if we can get back over 308, I think more 309, then I think we've got a shot at moving higher. So those are my lines in the sands for the Qs. IWM, this one tried to break out. We back tested the breakout. We stopped right at 177. 188 is going to be my level to the upside that I'm watching. That would put us back in between the 50 and the 200. Obviously, you want to get over that 200. Resistance here and here, resistance here. But over 188, it'll definitely look better. Over the 200 still moving average, it'll look much better. Under 177, 178, I think likely we start to look at, lower move to 169, possibly down to 162. So those are the indices. Let's take a look at some of the sectors that actually have been performing fairly well. This is XBI. Some people look at IBB. Basically, it's a biotech ETF. So here are some of the top holdings that you see: Beam, Twist, Fate, NTLA. You can look up some of those names, but basically what this is telling me, inverse head and shoulders, when you see this type of formation at the end or towards the end of a downtrend, this is usually a sign of a reversal. Since this is a daily chart, this one's played out for most of the year. And here's your neckline, right? So you have a high, you have a lower high, you have another lower high here. Draw out your neckline. There's your left shoulder. There's your head. There's your right shoulder here. And we have compressed moving averages. We got the 50 and the 200 very close to each other. We also have that year-to-date anchored VWAP sweeping right underneath. RSI looks like it's trying to break out. MACD looks like it's trying to curl up. So this is definitely one of the sectors that I am keeping on watch. There's a lot of relative strength within the name. But like I said, I would just go through some of these names and take a look for yourself. We'll probably talk about some of them when we do some chart reviews. Here's XLY. This is the consumer discretionary. Let's see, there we go. So we have Amazon, Tesla, McDonald's, HD, Nike. When people have money to spend, these are going to be the things that they're going to spend it on. You can see that, we are below a pretty big supply zone up above. So, even if we make it up to that year-to-date anchor VWAP here in yellow, or this 200 simple moving average here in red, we do have this supply zone up above to contend with. RSI is fairly neutral, MACD again neutral, no squeezes. So, but we're holding over this 50 simple moving average, right? Since we broke out, we are back testing it here and holding. So as long as we hold this 50, I think we've got a shot at testing the top of our wedge, which will be right at that 200 and that year-to-date anchored VWAP. And then above that, we just have that supply zone to contend with. Next sector we're going to take a look at is XLV. This is healthcare. So Johnson & Johnson, UNH, PFE, ABT, AbbVie, these are some of the names that you could look at. Setting up in a pretty large wedge for the last 4 months or so, holding just under the 50, the 200, and the year-to-date anchored VWAP. Obviously, I want to see this over the wedge to get very bullish. But right now, neutral, again, you could see a lot of supply here above until we get above that supply zone, which would also put us outside of that wedge and over our moving averages and anchored VWAPs. Then I think we can get a lot more bullish. But again, I'm not necessarily looking for bullish charts here. I'm looking for relative strength to the market. And, consumer discretionary, biotech, and healthcare have looked good. But also, this has looked really good. Solar. So this is TAN. This has all of your solar names. Let me see if I can grab those. It's a little large here on the screen. So ENPH, Solar Edge, Sunrun, FSLR. You could also look at ARRY. That's another one that's been acting very nicely. If I pull the volume back here, we'll understand where our supply and demand zones are. You can see we're in a pretty big supply zone right here, but we're very close to breaking above it. And if we zoom in here, you could see we're above the wedge, we're back testing, and we're bouncing. So this is the sign of a pretty strong sector. We've got a nice squeeze that it turned on, it fired, it went back into a squeeze. So this one's setting up pretty nicely. MACD is crossing over, RSI is holding over 50. This would be the sector I would say is my #1 sector to watch, probably for the rest of the year. I would say energy probably will come into play as well as we go into the fall, the later fall and early to later winter months. But yeah, solar looks really, really good here. Any of those names, ENPH, great setup, FSLR, great setup. What's the other one? SPWR is another one that has a really nice setup, and ARRY just has been a monster trade over the last couple of months. And then the last sector is utilities. And let me see, here we go. So that's NEE, DUK, SO. These trade similar to like oil and energy type of stocks. They're not very fast movers, but that if you're looking for kind of low beta type of names, then these would be the types of names that I would look at. You could see inverse head and shoulders potentially formed here. 77.31 is going to be your neckline. 80.86, 85.34 to the upside would be the levels that I would be watching. So that's pretty much, the sector overview. So we took a few minutes going through that. I think it makes sense. Let's take a look at some of the trade ideas for September. I'll go in alphabetical order, and we'll take a look at what we're looking at here. So again, this one, the trigger was over 25.33. This one actually triggered on the 12th and then failed right away. So if you did take that trade, probably should have stopped out right away. Although this one, I did put a looser stop loss on here at 22.50. So we're still holding over that level. So I think this one is still okay, but I'd much rather see it through 25.33. You could see we have an anchored VWAP tied to the power earnings gap up candle that we lost yesterday, and we continue to hold underneath it today. RSI is holding right on 50. MACD has crossed under, but is somewhat tangled and flat. And we have a squeeze that's still setting up. So this one's still a good-looking chart. Just want to see follow through on that trigger. Here's Lululemon. This one, I put a trade alert out on for the break over 200. We got that breakout on the 7th, continuation 8th and 9th, inside day on the 10th. We had that down day yesterday. And then today put in, let's see, is that an inside day? It is not, because we made a new lower low. So yeah, I mean, this one still looks good. It's holding over the 200. I think if we close back under the 200, I would stop out of this trade. But for now, it's definitely showing some decent relative strength to the market. Here's LXU. This one triggered this morning on a break and hold over 671. You saw we hit our first target at 1772. It was up just about 2% today. We closed right on top of that year-to-date anchored VWAP. We're above the 50. We're above the 200. We're over 50 on RSI. MACD is looking positive. So, has all the telltale signs of a good-looking chart. Again, I think keeping that stop loss under that 200 simple moving average makes a lot of sense here. Here's Meta. Talked about this one last week, reiterated it this morning on the breakdown of 155. We did come down to our first target at 150, and it bounced, right? So pretty good move so far, depending on if you're trading options. I think those 150 puts today played pretty well if you got it on the breakdown. Again, holding under 50 on RSI, MACD's crossed under. This one continues to hold under 155. I would expect 147 and 143 next. 143 might be the area to watch for a potential bounce. Otherwise, under 143, 137 and 126 to the downside. Here's VITL. This is Vital Farms. Had a nice bull pennant setup. We had that breakout and push over the 200. We came into our trigger. It failed at the trigger, which completely fine. That just tells me that that's a really good level to watch the next time we come back into it. So just hold this one on pause for now, but when we come back up to 1445, watch for a breakout at that level. So those are the trade ideas that are out so far for September. I know there was a bunch of other names that I talked about, but I didn't put out official alerts just based on how the market has been trading. But let's take a look at some names that actually have been showing some really good relative strength. Twilio today, I know overall this has been a pretty beaten up stock, but when you go down to that 30-minute time frame, ascending triangle breakout this morning, went right up to our first target at $80. So I think it's worth putting Twilio on your radar if we hold over 75.72. RYTM, let's go back up to a daily chart. I've been talking about this one for a number of weeks. Wedge breakout or pennant breakout here, another pennant breakout today. So let's just add that right there. There we go. So yeah, it hit that first target right at $30. 37 and 46 would be the next levels I would be watching to the upside. We did have a TTM squeeze fire off today. Nice bounce on RSI late last week. And then we have a MACD crossover with positive momentum shifting today. So this one might have some legs to the upside over the next week. So keep a close eye on RYTM. Here's ENVX. I know we talked about this one a lot as well. Nice power earnings gap up, right? Put that anchored VWAP right on it. We're right through it again today. Let's extend those Fibonacci levels out. And yeah, you can see we're holding over that 50% retrace at 23.54. And this one looks like it might want to come back up to these prior highs at 25. 27.32.39 would be my targets to the upside. Nice bounce on 50 on RSI. You see these bullish charts, when they pull back, they bounce right at that 50 line on the daily chart. So that's something to watch for names that are kind of running away from you. You don't have to chase them. Wait for them to consolidate and pull back. This is a patience game. This is a marathon. It's not a sprint. All right, MNTK, this is another one that we've talked about a bunch. Trade alert went out in June. It took a little while for this to trigger, right? It triggered initially and failed. Tried to re-trigger again, it didn't trigger. I didn't put the alert out back here. I put it on 6/21. It never triggered here, but you can see it triggered right on earnings or right after earnings, and then came up, consolidated. Remember, I said you don't always have to chase, wait for that consolidation, and then another breakout here of that wedge and moved right up to that next target at $20. So 22.86 is the next target to the upside. MACD kind of curled and crossed back over. Look at the pullback right to 50. Pullback right here, right? Again, don't have to chase them when they break out if you miss them. Never chase, wait for them to pull back. They always do. All right, MRSN, this one's been setting up still. Ascending triangle, nice false breakdown, back tested that year. The power earnings gap up candle, anchored VWAP, bounced today. Again, still a pretty good trigger through $8. TTM squeeze setting up. Look at the pullback, pull back to 50. Looking good. All right, EQT, cup and handle breakout. Nice back test on the neckline. Breakout was at 46.26. It also back tested and undercut that, that entry level, but here's that pullback. Here's the pullback to 50. Here's another pullback. Here's the pullback to 50. Again, can't make this stuff up. MACD's intertwined, crossing back over. We got a nice close today over 50.41. Watch for 55.78, 62.52 to the upside next. Let's see what else has been acting nice. ENPH, we talked about that earlier. Yeah, I mean, just, you know, nice wedge breakout, bounce, gap up, power earnings gap up, consolidation, breakout, back test. I mean, this is just, it's a chart that's acting very, very nicely, right? So say you missed the gap up, you wait for the trend to form, right? You get the consolidation wedge here. You can buy the pullbacks to the anchored VWAP off of the power earnings gap up, or you could wait for the wedge breakout. You know, you got that on September 7th. You missed that, you can watch for the pullback on the wedge. Here's another bounce opportunity. Buy, right? What did RSI do? Where did it pull back? Right here, right into anchor VWAP, right into prior support. TTM squeeze was setting up. So now what do we have here? So we had a daily squeeze fire off. We had a MACD crossover. We have RSI that still has plenty of room to run. I think 327 next, then 386 after. All right, what else has been acting? COP, that's another good one. This is ConocoPhillips, right? It's a slow mover, slow burner, but we took this entry on 819 over 101.19. We got the breakout. We back tested that 618 here. We came right back up to the prior highs at 114. We broke through that today. 124 is next on COP. What else? Wolf. We talked about Wolf a couple of days ago. This was on looks like the 13th. Let me fix that real quick. All right. And yeah, so bull flag, right? Bull flag breakout. Power earnings gap up, holding over the anchored VWAP. Let's zoom in a little bit. So here's the power earnings gap up. Here's the nice bull flag off of that gap up. There's the breakout there on the 7th. Back testing the 618 at 111. Back testing the power earnings gap up anchored VWAP yesterday. Relative strength to the market. When the market was pulling back, Wolf was going higher. Nice push higher again today. So watch for a move back up to 118, potentially up to 125. And then after 125, 143. AEHR, talked about this one. This trade alert went out on 8/3 over 1372. We took that trade. I sent out multiple messages about 1801, 1802. You even see it here, targets on chart to 1802. This is where we needed to take the trade off. Multiple alerts went out for that. But the next alert that went out is watch for a short under 1598. Here was your target pullback zone. There's the short. There's the bounce on the year-to-date anchored VWAP and the 50 simple moving average within that zone. Had a tangle of a lot of things going on here. And now we're bouncing right back higher. Yesterday they had news, and today inside day. So what can we do tomorrow? Let's look at a break back over 1689. We can target $18 to the upside. That would be in a breakout of an inside day to the upside. And then, the more times we test 1801 and fail, the more likely that one of the next times it's going to be a breakout. And I think that's coming. No squeezes, but RSI back through 50, and we have a nice MACD crossover inbound. So keep a very close eye on AEHR. Tesla looking pretty good today, still failing at the top of our wedge, but it's green in a red market, right? It sold off yesterday, but it gained everything back and then some today. So holding that 296 level, that 50% retrace, we closed over 300. I think that's very bullish. We had a MACD crossover. We bounced on 50 RSI. I think this one comes up to 317 next. After 317, we could look at potentially 346, maybe back to the highs at 384. But I think 317 for me, that's the sealing the deal. If we get more than that, it's just gravy. Okay, T-Mobile, slow mover, had news about something with Tesla and Starlink, filling the gaps in its service. I thought that was very interesting. Had a nice trigger breakout on earnings, but we've given a lot of that back, but we're holding over 139. We're not back under our trigger. So you got to be careful here. We did undercut that 786 yesterday. We're putting an inside day in today. If we fail at yesterday's lows, that I would just stop out of the trade and let the trade do what it does, and we'll be ready for it when it comes back again. What else can we look at? Here's SPWR. Mentioned this one earlier on TAN. Bull flag breakout, back testing that 618, 2646. We hold over that level, $30, $35 are next. Oh, what else can we look at? We got lots of good stuff. Lululemon, still very tight within this wedge. Entry was over the 200 simple moving average. We talked about that earlier. What else can we look at? Let's look at a couple of more. CSIQ, this one gave a little back, but back tested 39.51. So if we hold this level, watch for a bounce back up to $45. Here's the other solar name I mentioned, ARRY. Looks like a bull flag, but it's still like bleeding down a little bit. So I think this one still needs more time to consolidate, but the chart setup still looks pretty good from a relative strength basis. And yeah, I think that's it for the weekly charts. Let's just do a quick run through on some of the top tech names. And we talked about Tesla. Snow had a pretty nice day today. You can see it's in a nice rising channel. We're back at $200. I think over $200. We got a shot at 222. Shopify bounced at the $30 level again, but holding under that 50 simple moving average. So I think, once we get back over that 50, we should start moving towards 42.55. I think anything over 42.55, I think for me is a long on Shop. Amazon pretty much filling the gap here, nothing interesting. Apple trying to bounce, but unable to, holding right at that 50 simple moving average. Google, really uninteresting to me, unless you're thinking about potential short. This is a pretty decent short under 103.80, definitely under 102. This is a really good short opportunity. So I might actually put out a trade alert on this in the next couple of days for a short on Google. AMD and NVIDIA, honestly, just looking very weak. Again, we had a breakout trade at 100. It just ultimately failed. If we look at AMD, I mean, even NVIDIA is even weaker than AMD. You can see how weak this is. as the market's trying to bounce, there's no bounce in NVIDIA. So to me, this is still a really good short. I think down to 122 is a logical level. When we look left, a lot of support for a good period of time here, about better part of 6 months where it acted as support. So yeah, I mean, watch for continued weakness on NVIDIA. And let's see, banks, I like trading Goldman Sachs, but, kind of uninteresting. We talked about Meta. Let's take a look at HD. Blew past my target pullback zone. So obviously something else is going on here. Below the 200, below the 50. Just an uninteresting chart at the moment. And yeah, I mean, I think that's it. I think really the name of the game right now is just going to be patience. As I mentioned, we got our CPI data. It did come in hot. That's going to trigger the Fed to probably take at least a 75, maybe 100 basis point hike next week. Market's likely going to be choppy until then. We also had PPI today, which was neutral. We have quad witching on Friday. So a lot of chop, I think, around that event. So yeah, I think the next week, the end of this week into the middle of next week, I think is a really good time just to be patient, to reassess your positions and what you're in. Start doing, some charting on some of the names that you like, but don't buy into the volatility. You're probably going to see a lot of intraday volatility for the next 4 to 5 trading days. There's definitely going to be some relative strength, and I'll try and identify that and send out alerts or send out, chart watching alerts, just to keep things on the radar. But I'm not necessarily actively looking to take swing positions for the next few days. I just want to let the market do what the market does, not try and guess, are we heading higher or heading lower, and let price action really dictate, what my trading is going to look like, whether it's day trading or swing trading over the next, couple of days. So yeah, I mean, that wraps it up. This one's going to be a short one. If you have any questions, comments, concerns, you could always DM me on Twitter. That's always the easiest way to get me. But yeah, just hang in there. The markets, listen, this is not an easy market to trade, not even for, the greatest traders in the world. But, the good thing about trading in this environment is that it really prepares you for the next time it's going to happen. And there's going to be another bear market somewhere in the near to distant future. But learning how to trade during a bear market, it really, I believe, is a superpower, because it prepares you to see the market when it's not a bear market. When we turn back into a bull market, everything is just going to become so much clearer, and the trading just becomes so much more fluid. So, and I think we're closer to the end. I mean, we're technically out of this bear market, but there's a recession looming, that they're talking about. There's more rate hikes. The macro environment hasn't changed. So, I think we're on the other side of this, but I think we still have to endure a little bit more of a bear market, possibly for the rest of this year. So just keep that in mind. But in the meantime, there's always true market leaders. There's always relative strength in the market. So appreciate every single one of you. And like I said, if you have any questions, just DM me on Twitter. Take care, everybody. Have a great evening and good luck in the rest of the market.